Welcome back. Just after 3 p.m. Eastern Time, final hour session. Thumbnail today, SPX prediction 59.05. I'm looking for price to be below that by the end of the month. That is a big gamma level with the quarterly expiration. So if you're looking at the end of quarter, June 30th, which is on a Monday, want to take a look at the price action that played out in Q1. That key level is 55.65. We got right down to it, actually went through it to the downside, and it was an in the money floor that the day of expiration, the market ripped up about 2% to stay above it, and it ended up finishing out of the money. So what I'm making a claim here is saying that the current price around 59.80, that over the next 2 weeks and a day, we've got 2 more full weeks of trading. We have the Fed next week. We potentially have an escalating, conflict going on in the Middle East. Israel just attacked Iran. Iran might, retaliate. We'll see what that looks like over the next week of trading. If the markets react to that or not, we'll see. But 59.05 is a big ceiling that was put on roughly, the start of Q2 or the very, very end of Q1. And I'll talk more about it. So I'm going to try to use some levels that I have in my trading view charts and my dynamic trend software and see if I can spot this. But obviously things are flowing, a lot more in like near term. So it's still key levels, but we'll talk about it on the software. Okay. Yesterday's title, not relevant. What's yesterday's title? I don't remember. When you do it every day, what was yesterday? I'm gonna look at my YouTube channel. Let's go live. Markets are boring. Yeah. But I said that because what was I sent a video on TradingView, and what did I say? Boring for now. But I expect in the next 30, 60, 90 days, things are going to get a lot more interesting. So, I mean, look, honestly, we should be thankful that today is not any more exciting than it is. I mean, we're only down 1%. This could have been way, way worse as far as the, recent volatility. We've had the VIX down to, 15, 16 from highs at 60. The market has been clearly very boring. The bears have not been doing anything substantial. I mean, even last week, it's like, when was our Elon Musk and Trump drama? Was that last week? Like here, that was like Trump and Musk fought it out on this day. Was it like June 5th? This was last week, and it's like, that's old news. Market still grinds higher. This week started off higher, 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 higher. Gets to a high on Wednesday. Tries to get back to the same high on Thursday. Gaps lower today. Ends up trying to fill most of the gap and fades. So here's what I'm saying. Takeaways from current price action is this. This is a bit of an island right here. If you look at today's candle as just what it is on the daily, I think this is going to be a pretty key spot because the close of yesterday is here, and the close of today is likely here. So here's the body for today. Here's the close from Thursday, and coming into trading on Monday, are we going to have this tiny little quiet day on Monday? Or are we going to actually start to see some risk off trading? Because I go to the trend lines and, trying to connect the dots with pretty straightforward price action. This is a low back here on May 7th, low here on May 23rd, low here on May 30th, low here on June 2nd, low here on June 5th. That's a lot of touches. Like, that shows that trend line has been respected by price for the last roughly month or so. Okay. Now that we are rolling on the right side of this, I have done so many live sessions and so many videos just talking about, look, the markets are boring. They have been boring until price tells us otherwise. So if I go into my Telegram here, I'll look at what I posted yesterday. And if you watch this video that I posted on TradingView, volatility incoming, but price will say when. Well, today certainly seems like a bit more proof that volatility incoming, things are kind of breaking down a little bit. I keep watching this 59.05 level. I think that we're probably going to have that be out of the money, which means for a resistance level, price would have to be below that. So if price is less than 59.05, that is essentially the big ceiling that was set on April 1st is obeying, right? Or price rather is obeying to that ceiling. So that wouldn't be a surprise. And, the last couple of weeks, we talked about what's the catalyst, what's the why, what's the reason. Well, what we have right now is a bunch of headlines that are about Middle East conflict. And if there's escalation, if there's Um, if there's retaliation, I mean, honestly, in the U.S. right now, there's protests going on all over the country. Um, like I live out here in Utah, about 20 minutes north of Salt Lake City. There are things being like, I don't know, there's like Molotov cocktails and crazy stuff getting lit on fire downtown Salt Lake City with protests. I mean, some of the bigger markets, big cities around the country are doing the same thing. LA, obviously, we had riots. So anyway, it's like, I mean, okay, markets didn't really seem to care about a lot of stuff, but they at least maybe the markets are latching onto this today. I think it's interesting. I just had 300 missiles from Iran, only 9 impacted. Got it. Just read this just a little bit ago. This would have been under trending interesting ideas for me. This is an unusual whales post on Twitter or X. Numerous U.S. politicians appear to have bought war stocks before Israel attacked Iran. U.S. Congressman Josh Gottheimer bought RTX, which is Raytheon, a weapons manufacturer, last month. Congressman Bruce Westerman bought RTX on April 7th, 2025 and March 2nd, 2025. So in the last couple of months, we've got, some politician buying. This would be your quiver quant. This could be your other services that are following insiders. It's usually hindsight. It's usually after the fact. This is the same tracker that's like trying to, chase Nancy Pelosi, which she tends to be right, but it's always after the fact. So, I mean, yeah, they started to rip on Donald Trump in the very beginning of the year. Defensive stocks were going up. Trade war tensions certainly made them go a little bit higher. So, I mean, look at Raytheon, for example, RTX. So RTX Corp up 145. I mean, since the bottom here, 113. This is back in April. I mean, we had like the trade war breakdown at 112. We actually offered up a double bottom at 112, and this thing's up a decent chunk. I mean, that's up about 30%. So, I mean, it's not up. I mean, you had AMD that was up 90 plus percent. You had I mean, Duolingo was up triple digits. I mean, we've had a lot of stocks since the bottom in April that have done well. So it's not just like, but the fact that it's always a little interesting where it's like we have a major event like a geopolitical conflict that's escalating, and it turns out that we had, politicians that were buying defensive stocks 1 or 2 months ago before this goes live. It's even more suspicious if they were like loading up positions like last week. This is very similar to Pelosi and company buying everything that's chip related when the CHIPS Act came out during the Biden administration. So it's like it happens, and I'm you can't chase all this stuff. It's always after the fact. You always feel like you're missing out. It's not what trading is. It's like you're getting lucky if you're chasing these things. You're usually too late. So you're either in the trades, or you're not. I've taken plenty of trades this week. I'm trying to think here. I'm just going to look at one of my services, my pinch point scanner. We've had a lot of good trades going. We took trades today on Dell, on Nike. We had a couple winners close out. Schwab is a new trade this week. Rocket's a new trade this week. Just active scanning all week long. We ended up taking probably 5 or 6 new trades. My Project Options Edge was very active. Trade on Nike, trade on Oklo, trade on Pepsi, trade on Robinhood, trade on Progressive. And I closed out a little loss on Spotify, which I'm curious what this is. This was an expiration, I think, for next week on Spotify. We're still trading at 710. My break even would have been 680. So I ended up saving myself around $1,900 on the trade as far as risk goes. Like if it stays where it is, I'd be losing about $2,700. I ended up taking a loss of 900. So the net loss is going to be about 915. This put side is still going to be profitable, but the call side it exceeded, and it's no big deal. So took a loss. What else is going on? Need a 420 holiday. It's too late, Pete. We got to go 420 2026 now. Yeah. There's a clue when diplomats were removed from Iraq a few days ago. True. Yep. We had like it was one of the embassies, right? We were evacuating one of the embassies. I mean, that's definitely a clue. So, but look, the Middle East has been a hot spot for forever. I mean, certainly in the last, and like in my lifetime as a kid, it's like, Gulf War in the 80s and 90s. Like it's been a hot spot for us for a long time. We had Afghanistan for a decade plus. I mean, did we do anything? Did it help? Did we just waste a bunch of money? I have no idea. You're basically funding insurgents and factions, and who knows? It's like nobody knows. But it has to be something to do with like the presence in the Middle East. Is it oil related? Maybe. It could be. I'm sure there's an ulterior motive. I don't think the U.S. does things out of good of its heart. I think there's political motivation. I think there's financial motivation. I think there's a need to be world number one and stay number one. And our military is one of the largest. We spend the most money on it, and that's always the looming threat. But anyway, we're talking trades. So back to the charts. Based on price action today, daily profit play, we should be looking good here for the last 42 minutes for full credit on the broke wing butterfly today. I didn't get both of them filled. I just got one of them filled. So it's going to close out with that 60.50 pin price. I mean, we still have, if there's like a miraculous move to the upside, we have a profit trap at the 60.50. That's very unlikely. There's probably a single digit probability that even happens. Otherwise, we'll just stay where we are at. But like I said, I went back to these really safe, really technical lows, connected the dots. We are rolling on the right-hand side of this right now. I do think that the bears have a little bit more room to claw back at some of these corrections. I do think that the bulls could roll over and, at least in the near term, give back some of these gains that we've seen since the bottom on April 9th. I'm still looking to position accordingly. I don't think that the market is necessarily roll over big bear market. I think this is a maybe a pullback into like 58 to 5,700 zone. That'd be kind of the conservative level, would be coming back into this U.S.-China trade agreement gap. If we pull back a little bit deeper, 56 to 55. I mean, think about this whole thing. Let me just draw like a big fat line from this fib. So we have this giant high, this giant low. Let's just pin. I think I already have a fib there, actually. Now that I just draw that. Yeah, I already have a fib there. Okay. So let me highlight this. I'm just going to put a big, thick line in here. Okay, so let's say that we have so this high to low, we just go to equilibrium. That right there is about the 50% pullback from this high here to this low, okay? Now, you can clearly see a lot of consolidation in this area. That price was very bearish below it, and now it's been bullish and drifting higher and melting up above it. So I don't think it'd be a surprise to have price coming back into this area. So if I were to highlight, where price can kind of struggle and not really give any clear direction, maybe drive some traders crazy on indecision, it would be somewhere in here. So between around 5,700 and 5,500, this to me is like the big fight zone. This is where the bulls and bears are going to duke it out. There might be a lot of choppiness. There might be a lot of indecision. There might be a bunch of traps. But I would like to see the VIX actually go up a little bit, maybe get into the 20s again so I can sell some premium. I'd like to see the prices come down a little bit. I'd like to see a pullback towards this U.S.-China trade agreement gap. I'd like to see a settle in so I can start positioning for options that allow me to make income as long as price stays above these April lows. So selling ratio spreads on the SPY, on the Qs, on the DIA, on the Russell. I like all those trades. It's not crazy amounts of positioning, but if we have a decent little pullback to the tune of maybe 4 to 6%, 3 to 5%, 7 to 10%, that could be realistic. And I think that's enough to maybe spike the VIX up where I can start selling some decent volatility and position for my waterfall income course, position for some of my like 111s and 1111s that I like to take to get some income over the next like 60 to 90 days. And I don't think this low is necessarily going to be threatened, but I do think there could be some higher volatility ahead. So it's not a bottom, Steve. It's actually the opposite. I'm calling that as a ceiling. I think that we're going to be below 59.05 by the end of the month. That's my forecast. I think 59.05 is going to be the ceiling that price is going to have to fall back below. Okay, and I'll explain why. So every quarter, this is kind of like this big unwritten rule, but it's something you can see in the options chain. You can see this every single quarter. JP Morgan has a huge investment arm with tens of thousands of contracts in the market, right? So inevitably, even with dark pools, it's like there's option chains that have to create a market for these levels, and there's typically a quarterly ceiling and a quarterly floor based on sell premium. So JP Morgan, for example, from what I can tell from my calculations, roughly every quarter is this giant investment firm. So JP Morgan and their however hundreds of billions of dollars they have. We're talking about, I don't know, we're talking about levels that are typically between like a 10 and 20 delta. Okay, a 10 and 20 delta. So we're only a couple weeks away from the end of the quarter, but I want to zoom in here because I spotted this same level at the end of Q1. And I talked about this. You can go back and watch any of my videos here into the the middle of March. So we talked about, middle of March, end of March, I was shouting 55.65, 55.65. Lots and lots of sessions. You can go back and find that. So I'll just make this as a note. Okay. So watch what happened back here. I'm going to put a line at 55.65. So let me edit this line. 55.65 right there. Now this was let me label, actually, let's label this here. So we go Q1 floor was 55.65, and that was a JPM put floor. Okay. And so for weeks, this was popping up on the radar as March was unfolding. Now, we obviously had a pretty good rotation out of Mag 7. The markets were dropping. This was all before a lot of the heavy news on trade war tariffs were happening. That got a lot more severe at the end of March, because we went into end of March and April with like, oh my God, we're going to tariff the world. What's Trump going to do? Liberation Day is being announced. It's going to be April 2nd. So I just want to put an interesting note on this, because if 55.65 was this big light up gamma level offering a floor, I just want you to see how crazy price action was to still get this trade to finish out of the money at the end of the month. So we have a sell-off March 26th, indecision on the 27th, even though it gapped lower, another big sell-off on Friday the 28th, and on the 31st, which was a Monday, the market gapped down and ripped up 2+% for the day. This bottom to top on the day was a 2+% move off those lows. This was a big candle. That was a 2.47% move from bottom to top. The open was obviously a gap lower. We tested the lows and then we ripped up. That got us back above the 55.65 floor. So where did price close on Monday the 31st to end the quarter? 56.10, which means this did exactly what it does. There's a floor, price stayed above it. All the hedging was taken out that exact day. You've got your delta hedging, you've got your, gamma exposure in a 0-day environment. Things move really quickly, and that became a threatened level that was closed above. That's why I'm putting the same thing here on 59.05, because that is a ceiling that has been created. So once we had this floor established, okay, let's say we had the 55.65 and the market's right here at the end of the quarter. So you take this level, you go out April 1 or even March 30th, and there's either going to be like a 10 to 20 delta call, okay, and a 10 to 20 delta put. Does that make sense? So it's going out about 90 days. So you're going like a 90 DTE, so another quarter, which would put us out to June 30th, and you're looking for a window. Now, a 20 to 10 delta is going to be so let's say this is your center price. So I'll put CP here for center price, and we're looking up, right? So a 20 delta is going to be somewhere in here. 10 delta is going to be somewhere in here. 20 delta put is going to be somewhere down here. 10 delta put is going to be somewhere down here. This is roughly the ceiling. This is roughly the floor. It's not an exact science, but within that 10 delta range, that's probably like a 30 to 50 point area that price is likely going to be a ceiling and a floor. So the 59.05 is right in here. Interestingly enough, that's roughly where that kind of 10 delta, 20 delta is going to be. That's where 59.05 is coming from. Does that make sense? Seeing tons of buys for MO, which is tobacco. Why buy that? It's the dirt portfolio, man. If you're buying wartime, if you're buying oil, if you're buying tobacco, you're buying firearms, you're buying defensives, like it's the dirty, nasty, gritty portfolio, but it tends to do pretty well. A lot of those are cash heavy companies with good dividends. I mean, MO was one of my best performing holds last year. Surprisingly, I mean, I guess surprisingly, because I bought it at $40 and it went up to like 56. Now it's up to $60. That's a lot of price appreciation on a boring low beta defensive stock. Plus, it has a 7% dividend. So that's a nice little multiplier. What about the daily gap created April 23rd? Price user retest all gaps. True to a point. I mean, I see all these levels getting potentially retested. I mean, I don't know about all gaps. I'd say the big gap here is going to be, to me, the most important gap is this one. This Friday, May 9th into Monday, May 12th. That to me is the big gap that the market's going to come back and test. Now, we did test it briefly, but it offered support. I could see the market testing it again, possibly filling it. And like I said, Look at this big area between like this 50% zone. Here's equilibrium. Here's all this indecision around a 70% zone. I could see the market coming right back into this big chop fest where the bulls, all of a sudden, if the bulls lose out on this momentum, all of a sudden we're questioning the integrity of can the bulls make this melt up happen? What's going to happen to our 90-day pause? Are we going to negotiate in July? Are we going to extend this 90-day window for more negotiations? I mean, I don't know about you, but I haven't heard anything on the trade war front. I mean, we've delayed China twice. Trump has publicly said we have a done deal, which we don't. I don't think we do at all. And we have an inked deal that is like in faith with the UK, which we already have a surplus with. So I don't know how many countries are truly lined up to say that we're doing business with the U.S. Here's exactly the terms. Everything's solved. I mean, I don't think the market cares anymore. As long as the U.S. isn't trying to thumb the world on tariffs, I think the market's going to remain pretty resilient. But what other factors do we have? Well, we're trying to squeeze this tax bill down everyone's throats and shove it in by July, maybe early July, before the holiday break. We possibly have a Middle East conflict that's escalating. Oil prices are up 40% from the lows. Excuse me, the last 3-4 days, gold's been up a decent amount. Silver had a nice run this week. Commodities are taking off. Dollar hit fresh lows. Bond market really hasn't made a budge. I mean, I'm not really seeing safe haven plays out of the U.S. bond market. We're off the lows a little bit, but bonds are actually down today. Yields are up, bonds are down, which I think is interesting. Okay. Will these be day trades? I don't know. I mean, what are you talking about? You can trade whatever you want. All I'm saying is, here's what I'm doing. If price falls this way, obviously if it's going to turn over a little bit, then I'd be looking at selling some calls, day by day and trying to grab some short-term income. If price falls, I will let price, fall enough where I can start positioning for out of the money options, selling puts, ratio spreads. Would I own the SPY, own the Qs below the lows in April? Yeah, I would. Because if I want to start allocating again to the S&P ownership or the Q's ownership, if I own the shares at April lows, I'm getting a 20% discount on the S&P, a 27% discount on the Nasdaq. I know that we could potentially go lower, but I don't think that the current narrative and current landscape is weaker stocks and breaking those lows. Like we were going into a systemic risk-off environment during Liberation Day. That completely has pivoted. We're not there. Like that's not happening. This is trying to negotiate with the world, trying to be pro-growth. This is trying to implement something that's trade more, right? Not trade war, but trade more. That's like the spin on it. So, I mean, right now I think this is noise for the market with Israel and Iran. The Fed is next week. I don't think that Jerome Powell is going to say really anything out of sorts. I think he's going to stick to his guns like he typically does. His press conference will be very boring. He'll say the same script. I wouldn't be surprised if the Fed minutes look exactly the same as what they had last time. We're likely going to see something in September. He'll probably maybe touch on inflation, that it's still creating uncertainty on when they should cut. We don't know the overall effects of monetary policy, or if monetary policies needed to be reactive with tariffs and inflation. CPI, PPI data didn't really surprise this week. It kind of stayed, within expectations. It was a little bit improved, but yeah, I mean, I think the market is just kind of in limbo. In a way, I'm kind of happy. Like I'm kind of happy that we're not at all-time highs right now. I'm not saying that we can't go to all-time highs. I mean, hell, maybe this like 1 or 2% correction that we're getting today is immediately bought next week and we're right back to highs. And then we're having the same conversation like, hey, remember that missile strike? Did it even matter to the market? Nope, we made new highs. And it just like keep connecting the dots. But I'll go back to the charts. We're on the right-hand side of the trend line. Right now, the bears could potentially have the upper hand. If price is going to glide lower, then I want to be selling some premium at the highs. If I can get maybe 50 to 70 points away from price and stay out of the money, I try to sell some premium. And if volatility expands, hopefully I can move that to 70, 80, 90, 100 points out of the money so I can get some premium. And then when price is falling enough, I'll start looking at the bigger picture, 60, 90 days out, and selling some puts on the SPY, the Qs, the Dow, the Russell at levels I'd say, look, I'm willing to own it. And to me, it's like I'd be willing to own it at April lows. I would be. I don't think we're going to get to April lows, but if we came down to threaten them, I'd be willing to own it. Okay, but the probability to me is pretty darn high that I can just keep generating some income, and hopefully this is like, trying to be optimistic here. Let's say that the market does, as we're kind of breaking this trend line here, it does roll over a little bit, come back into this kind of big indecision zone that I talked about. Okay. If I can position here for two things: one, I'll position for income trades down below the April lows, and two, I can position for a tilted move back up to the highs. So as an example, I could position for, if we're in the middle, I could go out 90 days, 120 days and buy the highs. A debit spread. I could do like a 61.10 by 61.20, pay $1 to make $9. If price goes back to all-time highs, that's a huge return on capital, right? So there's ways to position for, let's say, whatever, a 9-to-1 upside. There's ways to position here for a high probability income trade. So I'll put income down here. If price is still pulling back, I still keep selling calls. I sell calls on Tesla, sell calls on MicroStrategy, sell calls on IWM, sell calls on SPY. All the shares that I own right now, just sell calls, lower my cost basis. Okay. But the good thing is there's plenty of trades to take. I'm still in gold. I'd love to see a gold pullback, but with this little rising tension, I mean, maybe gold is going to revisit highs again. Last 3 days, gold's ripped up pretty nicely. I'm still not excited to buy gold at 3,500. I'm really not. So do we go up in gold? Maybe, but I wouldn't be shocked to see it hit 35 and still go sideways. If it goes higher, enjoy the melt up. I'm still long gold. I'm long GLD. I'm just not positioning for, adding into futures. I'm not spot trading it. I'm just, enjoying the shares with GLD. SLV, or I'll go XAG first. So this one had a really nice move, from 33 up to 37 almost. That was a really nice move on silver. That certainly jumped a lot higher than gold. That was up almost 12% in the last couple of weeks. So to me, this is a pretty good move that silver is trying to go higher. Now, silver usually doesn't run, excuse me, it usually doesn't run just hot, right? It usually doesn't just go into a crazy bull market. But even if silver is going to offer up a nice channel, if silver offers up something like this, a little bit of a sideways channel, can we respect that where we just keep going higher, maybe pulling back here, find some dynamic support, go up again, maybe it just becomes a channel this way. Okay, but I'm measuring some big wave cycles. I'm measuring some big moves here, $41 and $48 on XAG. We've got all-time highs around the $50 handle. That's a 2011 high. That's a 2011 high and a 1980 high. So I'm holding silver for those levels. Silver is, to me, it's an asset allocation. It's a non-dollar play. It's precious metals. It's poor man's gold. And if gold's going to run, silver to me is cheaper, and silver is something I can measure the moves at. We haven't hit these all-time highs. I'd love to see that be the catch-up trade. There's 30 to 40% more to the upside that I can measure versus just trading gold to all-time highs in, like, where does it go? Gold is just like, I think it goes higher. Maybe it goes higher, but we could usually go range bound on gold. Okay. Meanwhile, watching Bitcoin as well. I think if you're interested in gold and silver, you got to consider Bitcoin in the mix, conversation wise. So, again, if we have a big tone and risk off, you're getting a little bit of pullback on Bitcoin, but not really that disruptive. I mentioned this before, like 100,000 to maybe 97,000. That's a nice little spot to consider some accumulation, and anything down here towards like 92 to 86. Nice little level for accumulation. There's some good demand zones down here. If we came all the way back down to 80 or 75, it's an unfortunate pullback. It's just a big range here. But if we could allocate and we go back up to the highs, that's a great trade. Who would not take that trade? If you could buy here with a stop loss out of the way and this market doesn't break the trend line, it goes all the way back to the highs, you're looking at risk here to reward here. And if we go to all-time highs, it's all upside. It's just a good-looking trade. That's if we come back down that low. I think that Bitcoin might just come back into this area, maybe this area, and offer up, just a clean trend line break, maybe a higher low, and we channel this out, build up some trades in here, go up to higher highs around the 120 to 130 handle. But it has to be risk on. I still think that with increased money supply and risk appetite, Bitcoin will make new highs, or we just see like a bigger dump in the dollar, and I think Bitcoin gold continues to make new highs. So this risk off tone today, pretty interesting. So oil is up, and the CAD has taken a bit of a bid from that. Dollar is close to one of the top. It was actually by around 6:50 a.m. today. was one of the top currencies of the day. Risk off trading on the Aussie New Zealand, they're still the weakest on the day. But we had a big jump around 8 p.m. That's when futures jumped in the U.S. markets. So U.S. futures, S&P, Nasdaq jumped. So that was your ES and NQ. We had a big currency move on the Swiss and the yen. They have since fallen back to baseline. So I mean, a little bit of a jump in volatility that has then spent the rest of the day just kind of quieting down. So big volatility expansion that is then settled in. There could be more to come next week. This could just be the initial kind of knee-jerk reaction for the market to have some flows, going into the next week or so. Yeah, I agree. Markets held up well today. I agree. I mean, this to me, and I talked about this morning in my daily profit play session. Look, we're at the lows of the day. And this is what I said. 59.20, 59.15 were the floor levels we were watching this morning. They're still very safe. We only have 20 minutes left. They would have held. They would have been pretty small deltas, like a 10 delta, 5 delta. They held. But I didn't want to call the floor. So I didn't. I mean, I took like $900 and some risk today for my little winner, and it'll just close out in the next 20 minutes, and I'll take my win. But if tomorrow, or I'm sorry, if Monday is more downside pressure, if we have big gaps coming in with a Sunday futures open that's negative, Monday market that's negative, this could drop pretty aggressively. So I'm just again, be patient. Don't do anything silly. I think that if we have escalated tensions, we've got increase in volatility. If all these things start to kind of quickly snowball into some bearish price action, I don't want to call the bottom every day. I want to stay out of the way. I want to give the market lots of breathing room. Let's see if the volatility can give us an expected move that's greater than the actual, and just be smart with some of our trades. Okay. It's strange to me that the VIX is rising, but stocks aren't dropping that much. I agree, but that's the thing is, like, there could be a lot of positioning going on over the weekend for this to all kind of start unfolding next week. So I mean, you mentioned it. If we go to the heat map here, go to the S&P today, 1-day performance. This is all happening live. So we have about 20 minutes to go. Let me just go back to the home page here, go to the heat map. Okay, so this has been lighting up red all day. Most of the stocks are down today. So the advanced decline is, 82.6% stocks declining today. Just a big market sell-off. Now the indexes are holding up, okay, because we had some winners. I mean, Palantir's up today, Oracle's up today, Tesla's up today, but what's down? A lot of other stuff. Software is down, tech's down, semiconductors way down, financials are way down. Energy is the only real sector that's up today. Industrials, aerospace, and defense up today. So your Lockheed Martin, your Raytheon, RTX, right? Let's see what is so General Dynamics. So I mean, you get some defensives, you get some energy with oil on that big squeeze. That's kind of it. I mean, you only have 18% of stocks up, 82% are down. That's a lot. So coming into next week, is that a buy the dip? I mean, I would be cautious of buying, the broader dip when we just have some good technicals that would offer a pullback. So look, I'm okay with this market pulling back. If we zoom in on this chart, you can go into a futures market as well, but look, it doesn't have to be super complicated. If you take this low right here, okay, connect the dot, connect the dot, connect the dot, connect the dot, connect the dot right there. What are we doing today? We're breaking that low. If this was a rising wedge, we're starting to show confirmation that we're breaking that wedge. So if we have some follow through next week, even if we have a pullback, I think this is an opportunity to fade and see if the market will settle in and start to come back with a little bit of reality versus just this melt up we've been seeing for the last month. Okay. So, I mean, again, watching price action, that's what I posted in my Telegram video. Volatility is incoming. Let price tell us when. Today, price is certainly speaking a little bit more volume. So I'm going to pay attention to it. I'm going to be a little bit more cautious. I think a pullback is great. I think a pullback is exactly what I want to see. I will position accordingly. Not heavy, not aggressive. I'll position for income. I'll position for, getting some higher volatility moves where I can sell some premium. But if I go out, look, I don't think it's a surprise that if we go from here to the highs, it wouldn't surprise me. But it would be nice to be able to participate in that move as opposed to, I guess we're 1.7% away from the highs. We're just going to get there, So I'd like to see us be able to position for, maybe 6 to 12 months out, getting back to all-time highs. But I want this trade to also give me something that's cheap. I don't want to pay, for a move that's going to go maybe 400 points. I don't want to pay for that move. I want to pay a fraction. So for a simple option trade, I could do like a 5 wide, 10 wide, 20 wide, but pay, you know, maybe 20% of that debit. So I pay 200 to make 800 when it's all said and done, something like that for a nice little income trade, right? There's ways to position. And then I'll also be selling a lot of premium. Okay. Gold usually leads the charge when markets get defensive. It can, but gold's already had a big run, Lee. I mean, gold had a fantastic run. I think gold is likely going to make a bigger run with more drama out of the bond market and the dollar. I think if the dollar continues to well, here's the deal. If the dollar index, which we are up off the lows today a little bit, I mean, the dollar index is something to watch closely. I still think this is a bear trap. I'm not selling dollar. I took my profit on euro dollar. I think that we probably see some lows happening sooner than later on the dollar. Even, excuse me, even if it's just a range trade, the dollar gets back to like 101 to 102. I'm not trading the dollar. I'm not calling the bottom here, but I still feel like an idiot if I'm selling these lows and this market just goes right back up. So to me, I think the better trade is waiting to see, will this trend line break? Will this divergence sink in, and will this market, put in a bottom, maybe get to the trend line and then start squeezing higher? That to me is not a bad trade to just get, it's like the opposite direction. Everyone's now like, dump the dollar, It's like, it's been dumped. This is a 30-year record of how bad the dollar performed. That's how bad it is. So I just don't think it's the dollar is just collapsing. I think that the dollar is weak. I think it's staying weak. We haven't really seen much of a reflexive bid on the dollar. We haven't seen much of a reflexive bid on the bond market either. But I don't think it's full on, sell the dollar. So my point is, if the dollar does come up for, maybe a couple hundred points to the upside, that could also continue to drive oil or gold prices sideways or gold prices lower. I think if the dollar catches a bid, gold will probably go sideways or lower. Dean 59.35. What are you looking at there? So I'm starting to get a big creepy level at 5,900. I mean, we only have 15 minutes left. I don't think we're falling another 65 points, but I'm spotting 5,900 for trades for next week. Okay, let me show this right here. So this is my current market. 5,900 is popping up pretty large in the next couple of days. If I edit this to a larger, so this is short-term trading. Let's go swing trades. Let's show all expirations that are starting to fill up here. I want to look and see where are my big liquidity levels. Okay, so let's go big liquidity levels on SPX. And remember the number that I said, 5,905, and here's my big gamma level at 5,900. So this is more of the swing trade, which goes out, anywhere between 2 to 4 weeks. And the big outlier that I see here is about 5,900. So let's see if this will, stay this way for next week. Do we still have a big level at 61? Sure, maybe. Let me go to a slightly higher time frame. Not sure why this is. All right. I think my chart just got frozen. But it's starting to line up. So there's my 5,900. We'll see if it just falls. Coming back into next week. Go back to my charts here. 5,905. I mean, so again, I zoom in. If we're breaking that rising wedge, it's been patience for the last couple of weeks, but this market does seem like it's rolling over a little bit. So watch this trend line. Okay, there might be some noise around it, but if we are pushing lower today, next week, if it's more downside, we're clearly breaking this structure. This is a rising wedge. This is rollover on itself. Rising wedge, if you follow the technical pattern, a rising wedge also tends to come back to where the whole thing started, right here. So anything between like 5,800, 5,700, again, that's talking U.S.-China trade war gap or trade agreement gap. But even if we pull back to the same highs, that would be a position to potentially fade and see this still goes lower. So I kind of like the confirmation. I'll see how it plays out. Okay. All right. Bond market. Like I said, TLT. I looked at it. It caught a pretty nice bid yesterday, but dropped today. So we were up to like 87.20 on TLT yesterday. I still have a sell call on my diagonal spread at 89. We're trading down to 86.28. It's down about 1% today. Yields have actually jumped up a decent amount. So, 10-year yields up about 1%, 20-year yield up 1.3, 30-year yield up 1.22. Again, nowhere close to the Liberation Day levels. This is when the market was dumping and dropping, and all of a sudden I think like stupidly celebrated a sub 4% 10-year when the market is just absolutely puking on itself. And that was our, basis trade, term premiums, bond market was like it flinched hard. And that was enough to get Trump to flinch as well. So Trump flinches, we do a 90-day pause, the market rips on that. And unfortunately, we haven't seen lower rates. We've seen a stock market that's gone up, but we haven't seen lower rates. So meanwhile, housing prices are coming down, shelter prices are coming down. I talked a lot about this last year. I think that the only way you fix the housing market is by having house prices come down. I don't think that yields come down. I don't think that rates come down. I think that house prices come down. From what I'm seeing right now, there's like 500 to 600,000 more sellers out there than buyers at this time. Like lots and lots of homes are listed and they're staying on the market longer. And in order to sell them, you got to eat into that equity. You think your house is worth over $1 million when you pay $200,000 for it. It's not. Like the market's telling you that. So I don't think it's a house market collapse by any means, but I think that you're going to have people that have that sub 4% mortgage that don't want to leave, or are going to somehow justify, look, we'll just sell the house, we'll get enough equity out of it, we'll do something else. I just think it's difficult to basically sell the market or sell your house right now and also close in on something that's a more expensive sticker price and also much higher rates we've seen in the last couple of years. But most of our country, most of the U.S. has fixed rates at around 4% or less. So this whole idea of the house market imploding, there's a big insulated market because it's mostly tied up in sub 4% mortgages and people are just staying put. Obviously by necessity, by need, it's like if you have to sell your house, you have to relocate, you have to move, that's fine. But I think the more pragmatic thing is you're not going to sell your house just for the purpose of selling your house, because if you buy a new house or you buy a used house, you're going to spend a lot more money doing it. So you're still kind of buying high, selling high, yes, but buying high, and that's not going to help anybody. So anyway, lots of stuff going on, right? So yields are up. Bonds caught a little bit of a bid yesterday, but they faded slightly. This is another thing to watch to see if the equities market does go down. If we start to see that little rising wedge pattern is starting to fall a little bit lower, I do wonder if the U.S. bond market does go up. If it does, that's probably a good thing because that offers a bit of a safe haven squeeze. My concern is that the equities market drop and the bond market goes with it. And that just shows me that this world right now doesn't want U.S. bonds. It's no longer acting like a safe haven. Maybe gold's a better safe haven. I think gold's a better safe haven. So I do have TLT exposure. I'm trying to actively lower my cost. My break-evens are around $85. I'm selling an 89. Once this month is done, I'm going to sell either another 89 or sell an 88 or an 87. I'm just trying to chip this thing down and get out of TLT. I don't think it's like going to collapse necessarily. I just think we're not going to really go anywhere. So maybe within a couple of dollars, just a lot of chop going on here. But I wouldn't be shocked to see that, if this goes up, that's kind of a good thing. But if we see the equities market roll over, go down, and the bond market goes with it, that's not a good thing. That's going to feel a lot like 2022. It was a weird correlation where like everything was down after the second half of the year. So if you got through like Q1 of 2022, inflation was a good play, commodities were good plays, energies were good plays. After that, when April topped out, everything was down from like April to basically October, and that was a rough market. We didn't really fight our way out of that until September, October 2022 at the end of the end of the cycle, and then Q4 started to get us out of it, and then 2023 was a pretty good bull market led by Mag 7. So anyway, any questions on that? So watching TLT, if stock market rolls over and bonds go down with it, that's not great. That's more evidence for me that I just want to get out of TLT positions and just stick with gold. If the rising wedge position plays out this way, watch and see how price behaves. Don't be fooled by a little up day. If we go up here to retest this level, but then fail at the backside of the trend line, don't be surprised if this is just the market leading up for a bigger sell coming. Okay. So I'm going to keep hammering this 59.05 level And I'm not like actively trading at bearish to 59.05. I'm just saying I think that we're going to end up settling by the end of the month, end of the quarter, below 59.05. So any rip to the upside, I'm going to look to sell that. Okay. Any days that the market comes in, just opens on Monday, I'm going to primarily focus on staying out of the way with some inexpensive low delta bear call spreads. And if price goes down, or even broken wing call flies, right? Price goes down, I make money. Price goes down more, I make money. I just try to stay out of the way. Okay. All right. We'll talk about that more next week. Busy week next week. I'll be a panelist and a battler, a pugilist on the trade battle next week on Wednesday during Fed. I think we're starting the session around like 1:30 p.m. So just before the 2 p.m. FOMC on Wednesday, I'll be in a live session. Nick Syack with A1 Trading is hosting. Blake Morrow and myself are battling it out. I've known Blake for a long time. He's with FOREX Analytics and Trading Analytics, and I'm looking forward to doing some work with him in the near future. And next week we're going to battle it out, trading whatever. Where I think we're trading currencies, we're trading gold. We'll probably throw in a little wild card trade. So should be pretty exciting. You can tune into that. I'll have that hopefully streaming on my YouTube channel. In addition to we're hosting on 8cap, we're hosting on A1 Trading. So it'll be next Wednesday around 1:30 p.m. I'll post that in Telegram and Discord. I'm trying to think. Also, I'm going to do a mid-year review next week. I've got a little presentation slotted for that. It's just what I'm looking to do right now, how I'm positioning, what I'm waiting for, what I'm looking for, and you get little tidbits of that every single day with these final hour sessions. Okay. What happened to my chart? There we go. Let's go SPY. See what's happening on SPY. So SPY 595. I mean, these climb pretty aggressively today. These are all over. So I got those levels there, and then also in my trading view charts, we have some floors. Okay, man, we have some floors. Let me get this edited here. We have some floors around this like current price. I mean, we've fallen enough on the SPX, but pretty big floor around 59.75. Maybe if it dips a little bit lower, which we are here, 59.70. But 60 and 50 were some strong support levels today. When we were looking at the markets, we talked about this like 59.15, 59.20. That would have been good. We were able to go up to around 60.50, down to about 59.15. I don't like to hold those trades all day. We're here 4 minutes before the close, and the trade would have worked out. But it was only offering this morning like 50 to 55 cents, and I didn't want to take that much risk. So I'm pulling in like a little mediocre, 40 cents a contract, but it's still a win nonetheless. And daily prop play had a good week. So net of the week, it was okay, and was able to roll some covered calls, take some profits. Summary wise, trying to think, I did have a pretty good week overall. Let's go to what was my summary. So we were 5 for 7 this week on daily profit play. Project Options Edge was 4 for 5. We had 4 winners this week, and Pinch Point ended up taking 4 out of 5 winners as well. We have like 20 some trades running. We took 4 winners between last week and this week. So yeah, I mean, pretty active. That is 13 out of 2, 3, 4. So 13 out of 17 winners this week. And a lot of extra positioning in the portfolio, selling some covered calls, pruning as usual. So, all right, we got just a couple minutes for the close. Any questions for today? Here's what I'm watching for next week. Don't be fooled by a little market move up, because if it's on the right-hand side of the trend line, that could be the perfect little bait. We come up here, it gets bulls to bite, and then the market fades. Okay. If there's more continuation next week where it just keeps sliding lower, one thing to watch for is, going onto your app, looking at a TradingView app, and pulling up your futures chart on Sunday night at 6 p.m. Eastern time. What's futures doing? Is there something happening over the weekend? Do we have more strikes? What's the price action going to do on Sunday when the market opens? Futures will kind of tell us. So if we're sliding lower in futures, then I'm kind of selling, near term rallies to get down to some key levels less than 59.05. I think we're going to be there. Okay. All right. Any other questions for me today? Any other charts you want to take a look at? Any other commentary? Any other stuff you want to talk about? I'm going to let my broken wing call fly cash settle. So that will be daily profit play. I'll just go in and post that message right here. So daily profit play, DPP update. Today's broken wing call fly will cash settle for full profit. Entry 40 cents credit. Closing 0-0. Cash settled by broker. So that'll be in 1 minute. So we're going to take that win, book it out, closing at 0, take the win. And off we go. Okay, so overall, decent week. About $1,200 this week. Not bad. And did see some portfolio highs. I was up to around 298 this week. Now it's down to 270 with today's drawdown. But still making some fresh highs. 298 is my new watermark for the year. I'm going to try to position to get back above it. Okay. All right. So we closed. I've got 596.92 on the SPY. I've got 59.76 on the SPX. And just a bit of an island day. So, going into Monday, watch futures. Are we going to respect this price action or are we going to break it? So next week's trading, are we pushing lower? If so, this could be a bit of a top. This high would be pretty safe. I don't think we necessarily break that high. So even if we have a melt up, like I'm not taking the bait, I think that's a rejection on the backside of the trend line. So we are now showing a little bit of evidence that this rising wedge might be giving back some of these gains by the bears, or from the bulls rather. The bulls are going to give some back and the bears can take over. But I want to see price action support this. If Monday we just come ripping back to the upside all the way back into here, okay, well, we've got to stay here, right? I mean, is this it? Like we're down, 1.13%, and then next week by Monday, Tuesday, we're up 2%. Okay, then this market just shrugs it off again and again and again and again. But if it's pressure mounting to the downside, any rally, I'd say, as long as I can stay out of the way, I'm trying to stay out of the way of the market. Because I think a correction is pretty good. I think 59.05 will matter. I think we can get below that. I mean, the nice thing is 59.05 is still pretty conservative considering a gap down here at 5,800 and a gap down here at 57 and 5650 could all be tested. So there's plenty of percentage correction. And I'm not bearish. Like I don't want to be bearish. I'm just saying give us something to position for something to go back to all-time highs. Okay. All right. So that being said, just at 4 o'clock, thanks for being with me. Every day this week, lots of live sessions, pinch point masterclass, a lot of fun this week. We got some good trades running, took some nice winners, and we'll continue to grind through that process. Daily profit play as usual, grinding through the markets every single day. Waterfall sitting in a bunch of profits on 6 open positions. Project Options Edge, adding more trades, looking for some income, and next week will be busy. Mid-year review, trading battle on Wednesday for FOMC. Should be pretty exciting. So we have U.S. protests, Iran tensions. Let's read this for a second. This is what's happening. So we got tensions in Los Angeles over immigration raids, set the stage for further potential unrest. It's literally happened in big cities all over. Salt Lake City right now, I just found out today that we've got protests going on in Salt Lake City, like right downtown. Let's see. Protests planned in response to Trump administration policies. Military parade in Washington coincides with Trump's 79th birthday. Happy birthday, DJT. S&P near record highs. Investors weary. So planned protests. I mean, it's funny, like planned protests. Like, is it just happening this weekend? So I don't know, man. Don't watch the news this weekend. If you want to stay optimistic, don't watch the news this weekend. Heightened concerns following immigration raids in Los Angeles and Middle East. Protests organized by the No Kings Coalition to oppose President Donald Trump policies set to coincide Saturday with the military parade. And okay. I don't know, man. So going to be like another assassination attempt. Like, just can't we all get along? You know, heightened geopolitical tensions, ongoing developments, negatively impacts market psychological standpoint. I mean, the market hasn't really showed like it cares a lot. Things are kind of melting or like kind of dripping over into it. Any damage to sentiment, willingness to take risk, add the challenge S&P faces. We're also sitting at a high valuation. Dispatch troops in Los Angeles over nuisance objections. Military action. Market's attention remains fixated on events unfolding in the Middle East. So it's probably a sentiment thing more so than market thing, but watch price action. Yep. So, all right. Enjoy your weekend. Don't watch the news. All right, buddy. Have a good rest of the day. Have a great weekend. I'm going to do a video real quick for my Project Options Edge service. I'm just going to do like a 10, 15-minute video for a trade update. We've got some good positions running. I just spot checked everything today. We have a bunch of profits that are rolling in. I just want to collect more on those. So Google, CrowdStrike, some of the new ones we took today, just kind of sharing that info. So if you're in my Project Options Edge, look for a video in the next like 30 to 45 minutes to get posted inside the Telegram channel. And have a good rest of the weekend. We'll be back in looking forward to grinding with everybody on Monday. Okay. Sounds good. Thanks. See you soon. Bye.